Hello everyone and welcome back to the channel. Today, we're diving deep into a topic that affects every single one of us, the Canadian economy. Specifically, we're going to unpack the projections for 2025. What does the year ahead have in store for our wallets, our jobs, and the country's financial health? We'll look at the big picture, from GDP growth and inflation to interest rates and the job market. We'll also explore the real-world impact on key sectors like real estate and energy, and discuss the major risks and opportunities on the horizon. Is a soft landing on the cards, or are we facing more turbulence? Stick around as we break it all down. So, let's start with the headline number everyone watches: Gross Domestic Product, or GDP. After a period of sluggish growth, most economists are cautiously optimistic about 2025. The consensus is that Canada's economy will likely see a modest rebound. We're not talking about a massive boom, but a gradual acceleration. Projections from major banks and institutions like the Bank of Canada and the Parliamentary Budget Officer are hovering around the 1.5 to 2.5% growth range for real GDP. What's driving this anticipated pickup? A big part of the story is the expected easing of monetary policy. In simpler terms, interest rates are projected to come down. After a series of aggressive hikes to tame inflation, the Bank of Canada is expected to begin, or continue, a cycle of rate cuts throughout 2025. This makes borrowing cheaper for both consumers and businesses. For you and me, that could mean lower mortgage payments and more affordable car loans. For businesses, it means it's less expensive to invest in new equipment, expand operations, and hire more staff. This increased spending and investment is the primary engine expected to lift economic growth. Another key factor is the stabilization of global demand. Canada is a trading nation, and our economic fortunes are tied to the health of our trading partners, especially the United States. As the U.S. economy navigates its own path, a steady demand for Canadian goods and services, from lumber and oil to auto parts and technology, will be crucial. Projections suggest that while global growth might not be spectacular, it should be stable enough to support our export sector. Now, let's talk about inflation, the economic villain of the past few years. The good news is that the battle against high inflation seems to be largely won. The painful price hikes we saw at the grocery store and the gas pump have cooled off significantly. For 2025, the Bank of Canada aims to have inflation firmly back within its target range of 1 to 3%, ideally settling around the 2% mark. Why is this so important? Stable, low inflation provides certainty. It helps families budget effectively and allows businesses to plan for the future without worrying about sudden cost surges. The journey back to 2% might have some bumps, but the overall trend is downward. This disinflationary trend is the main reason why we can even talk about interest rate cuts. The central bank's primary job is to control inflation, and once that's under control, it can shift its focus to supporting economic growth. So, expect less sticker shock in 2025, which should bring some much-needed relief to household finances. This brings us directly to the job market. The Canadian labor market has been remarkably resilient, but it has shown signs of cooling. The unemployment rate has ticked up from its record lows, and job creation has slowed. Looking ahead to 2025, the picture is a bit mixed. On one hand, the higher interest rates from the previous period will continue to have a lagging effect, potentially leading to a further softening of the labor market in the first half of the year. Some sectors might see slower hiring or even some layoffs. However, as interest rates decline and economic activity picks up in the latter half of 2025, we should see the job market stabilize and then strengthen. The unemployment rate is projected to hover in the low to mid 6% range. It's not the ultra-tight market we saw a couple of years ago, but it's still a relatively healthy number by historical standards. One ongoing story will be the skills gap. There's still strong demand for workers in specific fields like healthcare, skilled trades, and technology. So, while the overall market might be softer, opportunities will definitely exist, especially for those with in-demand skills. Wage growth is also expected to moderate, likely tracking closer to the rate of inflation, meaning real wage gains might be modest. Okay, let's zoom in on a sector that's on everyone's mind: real estate. The housing market has been on a roller coaster, heavily influenced by the Bank of Canada's interest rate decisions. The high rates of 2023 and 2024 put a major damper on activity, pushing many potential buyers to the sidelines. For 2025, the forecast is for a revival. As interest rates begin their descent, borrowing costs for mortgages will become more manageable. This is expected to unleash a wave of pent-up demand. Both first-time buyers who are priced out and existing homeowners looking to move will likely re-enter the market. Consequently, most experts are predicting a notable increase in both home sales and prices. However, don't expect a return to the frenzy of the pandemic years. Affordability remains a massive challenge. Even with lower rates, home prices in major cities are still exceptionally high relative to average incomes. The supply of new homes is also a critical piece of the puzzle. While governments at all levels are pushing for more housing construction, it takes a long time for these policies to translate into actual homes on the ground. So, in 2025, we'll likely see a housing market that's heating up again, but one where the fundamental tension between high demand and limited expensive supply continues to define the landscape for buyers and sellers across the country. Now, let's shift our focus to another powerhouse of the Canadian economy: the energy sector. This is a complex area with a lot of moving parts. On the global stage, oil and gas prices are expected to remain relatively stable, though always subject to geopolitical events. For Canada's oil and gas producers, this means another year of solid, if not spectacular, revenues. Investment in the sector is likely to continue, particularly in projects that improve efficiency and reduce emissions. The bigger story, however, is the ongoing energy transition. In 2025, we will see a significant acceleration in investment in green energy. This includes wind, solar, hydrogen, and carbon capture technologies. Federal and provincial incentives are pushing companies to decarbonize, and this trend is creating new jobs and new economic opportunities. The construction of major projects, like the Trans Mountain Pipeline expansion, becoming fully operational, and various LNG facilities, will also provide a significant economic boost, particularly in Western Canada. So, the energy sector in 2025 will be a tale of two stories: a stable, traditional sector and a rapidly growing clean energy sector, both contributing to the national economy. Of course, no forecast is complete without considering the risks. What could knock these projections off course? The biggest risk is always the unexpected. A major geopolitical conflict, a new global supply chain crisis, or a sharper-than-expected slowdown in the United States could all have serious negative impacts on Canada. Domestically, a key risk is the consumer. Canadian households are carrying a lot of debt. If interest rates don't fall as quickly as expected, or if the job market weakens more than anticipated, many households could find themselves under significant financial stress. A sharp pullback in consumer spending would be a major drag on the economy. Another risk is a potential resurgence in inflation. If price pressures were to return, the Bank of Canada would be forced to keep rates higher for longer, which would delay or even reverse the anticipated economic recovery. But it's not all doom and gloom. There are also significant opportunities. The global push towards decarbonization is a massive opportunity for Canada. We have the resources, the technology, and the skilled workforce to be a leader in clean energy and critical minerals. A successful energy transition could unlock billions in investment and create a new generation of high-quality jobs. Furthermore, Canada's strong population growth, driven by immigration, is a powerful economic engine. While it presents challenges like housing affordability, a growing population also means more consumers, more workers, and more innovation. If we can successfully integrate newcomers and build the infrastructure to support them, This demographic trend will be a major long-term advantage for the Canadian economy. So, let's bring it all together. What does 2025 look like for the average Canadian? It's shaping up to be a year of transition and gradual improvement. The intense economic pressure from high inflation and soaring interest rates should begin to ease. For homeowners with variable rate mortgages or those renewing, relief is on the horizon. For prospective buyers, the market might become slightly more accessible, though affordability will remain a key concern. For job seekers, the market might be a little more competitive than in recent years, but it's not expected to fall off a cliff. For those with savings, lower interest rates will mean lower returns on things like GICs. But it should also provide a better environment for stock market investments as the economy improves. And for everyone, the pace of price increases at the checkout should feel much more normal. In essence, 2025 is projected to be the year Canada gets back on a more stable and familiar economic track. The journey might begin slowly, but the direction is positive. It's a move away from the economic volatility of the post-pandemic era and towards a period of steady, albeit modest growth. Thank you so much for joining me for this deep dive into Canada's economic outlook for 2025. Of course, these are just projections, and the economy can always surprise us. We'll be here to track all the developments as they happen. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe and hit that notification bell so you won't miss our future updates. What are your predictions for 2025? Let me know in the comments below. Thanks for watching, and I'll see you in the next video.